Greetings to my Wyckoff friends. I am Bruce Frazier, your host. Welcome to Power Charting. Today, I felt the most important thing that we could do together is to update the current state of the market as we did last week, because it's been an impactful week. Things are happening. The market is moving. I would describe this market as being in a markdown phase. Very important because we know that the market goes from accumulation to markup, distribution to markdown. And so at some level on a scale, we have a distributional causal structure and then markdown occurring thereafter. We have been actually looking at the potential for this condition since July. I'm going to review a chart or two, and this today is strictly going to be a review. And at the conclusion, we are going to take a brief look at the Magnificent Seven stocks because they are all important at this time. So let's get started. First thing is looking at the Nasdaq 100, obviously important because it is dominated by these Magnificent Seven stocks. There's actually 8 that I'm going to look at, but the Magnificent Seven, one of my favorite movies, and so why not? And as we see here, and you saw this chart last week, and we know that it's been a very narrow market. Very few stocks have been driving prices upwards inside these indexes. Market capitalization is been a propellant of the advance and also might be a bit of a curse because we've had such a narrow market and so few stocks have participated. Here we see in the Nasdaq 100 that very phenomenon in action, and you can see that there are really 7 or 8 stocks that are really so big that they drove prices up and really led the indexes higher. These stocks also dominate the S&P 500. So looking at this trend channel off of this very large accumulation structure that goes back to May of 22, we have a very good stride in the advance and an overbought condition. Now I'm showing you a chart from July 20th of this year, and this was from the video, the power charting that I did with you, is trouble brewing in the second half, where we started to explore the possibility of exhaustion in these indexes. We can see volume is generally drying up in here. We're getting towards an overbought condition into the resistance area. Look at this, just touched the resistance that was defined by the distributional top of the bull market peak in 2021. And that resistance is formidable. We can look back. We may look back in the years ahead and say, you know, this was just a really dramatic advance in a bear market rally that took us up almost to the highs of the bull market and gave us a large secondary test of the bull market peak. And we have yet to see that. We will keep an eye on it, but we are going to do our classic Wyckoff tape reading to be able to tell us where we are, and it's done a fabulous job for us throughout the course of 2022 and 23, keeping us on the right side of the downtrend, the subsequent uptrend, and where we are now. And I will show you more in a minute. But note that we got into an overbought condition in July, right in here. And this overbought condition was unable to get to the top of the channel. Very interesting. We talked about that at the time. Also overbought in the stocks above their 50-day moving average. One of my favorite breadth indicators. Tip of the day here for this indicator is notice how you can see the character of this indicator changing over the course of the decline, the bear market, and the very good rally phase in 23. Well, the thing to look at is note the nature of this going from oversold to overbought, oversold to overbought over and over again throughout. And this is a sign that we're in a big trading range. Swing trading range that takes place over the course of cycles that last 6 weeks to 12 weeks and so on. But this, just looking at that indicator, tells us the nature of how the market is trading. And we see in price that that's exactly what happened. When we got into the very robust advance that started at the beginning of 23 for these mega caps, we can see that this indicator began to reside above the 40% level and lived in the top half. And so oversold became around the midpoint in the 40s and 50s, and then overbought was in the area of 80+%. That, just looking at that tells us that we're in an upward striding, upward trending market. That's a bullish thing. We want to cue off of that and recognize that we are in a markup phase, an uptrend. We want to exploit that uptrend to its fullest. And so that is just a way for us to confirm the upward stride of the advance for this particular index. Other indexes might be somewhat different. Okay, moving on. And let me clean this up because I am a messy Wyckoffian. And so you can see this is what happened since. And so note here the buying climax that we had right here. That was right exactly at the time that we recorded that, got together and talked about this phenomenon at that time in September. And keep in mind that was July. Keep in mind that was the beginning of the third quarter. The nature of the third quarter has been down, down, down. And so we talk about the quarterly effect. Well, the first and second quarters were up, third quarter was down, and the process that we could describe this as is distributional. So we have a distributional phenomenon across this area. I described it for you in last week's episode, but just study this at your convenience. But what has happened since? We've looked at this chart on an updated basis from July to the present in prior power charting episodes. So you might go back and check those out because, we're going through this together. Let's just keep focusing on this. But you already have drawn the conclusions about what has happened here. It went from an overbought condition at the top of the trend channel down to the demand line, which is the lower line of the channel, went down, touched it, rallied into a secondary test condition right there, and then came down and came to the demand line again and broke it. Therefore, thus, the stride of the advance has been broken. And this also comes with that distributional phenomenon. Notice that we have a sign of weakness here. Well, just today, this is Thursday, the 26th, you can see another lower low. And this lower low tells us that we have either another sign of weakness that will be followed by some kind of an attempt to rally, maybe a very poor rally, which we would call ice, or possibly it just continues to mark down and show weakness. Now, what's important about this is we're talking about, in the aggregate, these Nasdaq mega cap stocks and the other very important large cap names that all populate the Nasdaq 100. And so here, this is very important because we lose our leadership here in this advance, and it's going to infect the smaller, poorer performing stocks that are in the S&P, in the Nasdaq, in the Dow. And so we have to be very sensitive. We are going to take the second part of this program and take a very brief look at these Mag 7 stocks. Okay, now looking at this indicator overbought, oversold, I put this in yellow here, but look, we are now residing in the bottom of this oscillator range, which we should then uh, consider to be evidence of a downward stride in the market. And we would want to start to draw downtrend channels through here. And I encourage you to do that. And so moving on, let's keep going, is let's now look at the S&P. This is the S&P July 19th. This also was in that program that we talked about, I believe, that's what I recall. And that you can note that this became overbought at the top of the channel, just as was the case with the Nasdaq 100, because the most dominant stocks in the S&P 500 is those Mag 8 stocks, Mag 7, Mag 8. And so that is the reason for the upward stride. Many stocks in the S&P 500 had a much poorer performance during the 2023 year. Now, this is stocks above their 50-day, and it also became overbought, as was the case with the Nasdaq 100. And we now see that there was somewhat of an acceleration into the top of the channel. That creates an overbought condition. And what has happened since? And let me clean this up. And oh, it went to the next slide. So you can see here that it then broke off of the top of this channel, went down, made a lower high, and now it's going down. This was as of September 21st, a month ago, and we were coming into the end of the quarter. So now the bias appears to be down for the quarter, and so the demand line could be a potential target for where this could go to as of September 21st. Updating this to where we went, it did in fact go to the demand line there right at the end of the quarter, beginning of October, and then rallied into another lower high, and then turned back down, showed weakness in the ability to go below the demand line, and now look, lower low. And that is as of Thursday, the 26th of October, which is today. And so this is a very important place, because note across here that this is old resistance, so this should be new support, and it's now into that zone. So could this all be distributional through here? Well, we're going to have a look in just a minute. And then finally, I just want to bring you up to date on seasonality, only because it's at an important juncture at this time. And that is that you'll recall, and this is a unique way that I do seasonality, thanks to seasonax.com, wonderful website for allowing me to use their tool to develop this chart. And the low, which makes perfect sense, comes in October in the seasonality chart. You'll have to see the blue line there underneath all this, but the lowest low comes right about where we are now. Doesn't mean that we have to have exact pinpoint accuracy. May not be accurate at all, but this could set up the conditions, and I'll show you point and figure work that could confirm that would give us the potential for the start of an upward stride in the market into the end of the year and into the new year, the election year next year. But we will update that seasonality chart in a little while. Keep in mind, though, we could be at a place where seasonality starts to become more favorable sometime between now and early November. And of course, we will confirm that with our Wyckoff market tape reading indications, with looking at for structure, for cause, etc. Very important. I want to make a point about that in a minute. But the best part of the year for seasonality really was the first half of the year, and you can see that as of the beginning of the third quarter, that we lost our seasonality and it became a downward focus into the end of October, which is exactly what we've had. Okay, and so now let's look at some point and figure work. Now this is as of September 21st. I'm showing you charts I've shown you in the past. Cut off the, apologize, I cut up the volume on the bottom, but that's okay, we don't need it. And so you see here, I've taken a rather large complete count of this distribution area that we talked about, and I'm going to bring this up to date in just a minute, but it goes 4120 to 4000, and we are so that was our target objective with support coming in right at this area at around 4340. And this also, the swing trading upward count was spot on, very, very good. So we want to make sure that we have causal structures that precede moves. We don't just look for lows and then big rally phases or highs and big declining phases. We look for causal structure, and they will show up intraday, daily, weekly, etc. And very important to the Wyckoffian approach, cause precedes effect. And so with and point figure is ideal for identifying that condition. So now that was our objective. We put this particular chart up in September because we appeared to have had a relatively complete distributional structure. Here is cleaning it up. Sorry. Okay, cleaning it up. There's our count, 4120, 4000, and look what we're doing. Lower lows, lower highs, lower lows, down we go. We're only one entry away from fulfilling the minimum count objective, 4120 on the S&P. And then the lower area, which very well could be achieved, is around 4000. And so, and when we look at the mag stocks, that might help us to have a better concept for the possibility of getting down to those lower objectives. So this is an update of the chart that I just showed you with updating price, and that is through today. Nice hinge that formed at the conclusion of that distributional structure on a swing trading basis. It's possible also that we would want to include this into a bigger count objective area. Let's see what happens between here and 4120 and 4000 to see whether we get redistribution or a continuation of markdown, etc. Now, just to make a note, comment, a request to talk about the Russell. This chart is through October 3rd. I think the Russell is always interesting, but not important from the perspective of trading at this time, because it is leadership to the downside, and it has gone down to the bottom of this support area, fulfilling that distributional swing count. And we would need to see some kind of an attempt to build a swing trading cause for potentially higher prices, as we saw back here in this area all through here, which we do not have yet. And so for now, we just have a falling knife, and just something to watch, very interesting, but not important at this time. Turning to the triple Qs as a surrogate for the Nasdaq 100, and you can see here that this distributional count, which I took on September 20th, took us down to 328, 318, took us out of the upward stride of this channel. Note the overbought conditions here. Apologies, I was trying to be able to mark this up. And let me get my highlighter. Very good. And so here you can see throughout this area, we have preliminary supply. We have a climax, secondary test, sign of weakness, and we would look for now coming out of this area, look at that beautiful sign of weakness, is to go to the demand line, and then what happens thereafter, keeping in mind that this is as of September 20th. And here's an update. So here's the count that we just took, 328, 318. And this is the count area that we were just looking at. And in fact, that's exactly what we've done. We've come down and taken out that 344 level, and 344 is right here. So we're slightly below this very long-term trend channel that goes to the beginning of 2023, and this beautiful change of character in this advance. And also just to emphasize that this market became beautifully overbought with a climax above the channel at the conclusion of the advance, and then the steeper trend line was taken out, and now we're slightly below this. How far can we go? Okay, well, we have a count again that goes down 328, 318, and this count down here could very well coincide with weakness in the S&P that goes down to that 4,000 level. And so keeping that in mind, let's now turn our attention to the Mag 7, Mag 8 stocks. And I'm going to just pause here for a second, get that screen up, and we will get started and conclude with that, which will only take a minute. Okay, we are back. And you missed me, didn't you? Well, I'm here to show you using the candle glance view, these stocks. I love to look at this candle glance format. You can draw a very small relative strength line underneath these, which is super helpful to be able to scan entire groups, themes, etc. And also keep in mind, you can go to predefined groups, predefined industries, and so on. Look at how you can look at all these different industry groups and so on. It's fantastic feature, but I really like best. Let's just go through. Here's Apple. Note the nature of Apple's decline. Lower highs, lower lows, starting off with a very big drop that occurred in August. So the third quarter started with a bang, and you can see lower lows here in the relative strength, and now it's attempting to crest and turn over again. Amazon looks as though a distributional formation is at work and a markdown lower lows at this time. Google had a good upward stride to it, and we had talked about that. And now all of a sudden, with earnings down about 9% plus on the day after first trading day of after their earnings, and it was a very difficult day for Google. And then Microsoft actually was up about 3% on its earnings related to AI, etc. This has more of an accumulation type structure to it, and we will watch. But today, Microsoft actually had a pretty sharp down day, and we'll try to look at that. Meta, again, look at this test of this high, up thrusting and throwing over that high at this point, and then showing weakness thereafter. This could all be distribution. Up thrust after distribution might be the structure that we're looking at here. And then Netflix also had a big distributional structure, but a very good earnings report, but so far has only taken it to a lower high. And so people are excited about Netflix and their good report. But so far, this big gapping up action has stalled right after and is at a lower high. NVIDIA, very important stock. This leadership in the semiconductor space has been leading the very best industry group, and that has been semiconductors. But note that this has also a distributional characteristic. And then finally, Tesla. Also note how Tesla made a lower high in September, and then a lower high in October, and now is showing a sign of weakness thereafter. Now let's drill into a couple of these names. This is a very cool feature. So my default chart, as you all know, is a weekly chart, which I call my trend model format. And here you see this weekly chart had a new high in Apple and was leading the way. But now this decline that we just looked at has gone down to the 39-week moving average. And today is actually below the 39. If it doesn't catch a low here and start to rally back above, this will be a point or place of vulnerability for Apple. So, and keep in mind, they have a new product launch on Monday, and then I believe it's Thursday, they report earnings. And so let's keep that on our radar. And then finally, tip of the hat to my friend Andrew Cardwell. We miss you, Andrew. Here is a daily chart with an RSI, and here lower highs, lower lows. And now look at this sharp decline here today with a 2.5% downward move, wide bar on this Thursday, and again going into next week. So this is a very vulnerable stock in my mind. Needs to build a new cause before it can go up again. And so very important. Now let's look at another important stock, Amazon. Amazon, note that this is a distributional structure. This is what we just looked at on candle glance, but this is a lower high, this very large structure, which had a sign of weakness, last point of supply, and then a markdown. This is the bear market of 22, and then a rally into a lower high in 23. It's looking as though it has a downward bias or stride to it. And note how the relative strength from 2020 onward was really indicating that this was a stock that was starting to lose its leadership characteristic. Started to go up on a relative strength basis, confirming higher prices here, but now right on the 39-week moving average and approaching 39 on the relative strength. This is a place it needs to hold and have a better rally. But otherwise, this looks like it's in some kind of a downtrending characteristic. And then finally, let's look at NVIDIA. NVIDIA is very important. Note that this has a distributional character, but all of this formed really since May, June, and at a higher high. So definite leadership in NVIDIA, an incredible stock, went from over 100, went from 100 slightly above to I think high or mid 400s. Incredible leadership stock, and now it's down here at the area of support. And is this distribution? And we will take a look here. Very weak day to day. Last 2 days, spread has expanded and it's down into support and at the important 400 level, closing around 403 today. So if this breaks down, then this all becomes a potential distributional count from a point and figure perspective. Possibly in weeks ahead, we can look at the point and figure on this, but this is at a very critical spot right now. And so I'll leave it to you to look at these other stocks and study their characteristic. Last one we'll look at here, we looked at this last week, was Tesla. And you can see that the upward stride has now today been broken, and it is slightly below the support area on a weekly basis, and the relative strength is also below its 39. So this is a stock that's in a perilous condition right now, and this is a lower high from these highs that were made in 2021 at the bull market peak. And so with that, I'm going to say thank you so much for being here, and I appreciate your time, and we will see you next time on Power Charting.